Good afternoon, everyone. BC Richfield here, coming to you live from Suffolk. A little bit of a change from our normal London location, but want to wish you all a fantastic day wherever you are in the world, and a big shout out to everybody who's joining the stream live, as well as everybody that's going to watch this on recording. So I hope you are all well. Good start to the week. Got a few interesting things in store today. We're going to do our alt requests. So if you've got anything in mind that you'd like reviewed, it doesn't have to be cryptocurrency. We can go through FX as well, or obviously ES and NASDAQ as well. So that's the S&P 500 and the NASDAQ. Good day, Carlo. And yeah, good day, everyone at the Bird Nest. Good to have you on board, buddy. So yeah, like I say, I hope you're all well. It's actually a nice, mild, sunny day here in Suffolk, which is on the east coast of the UK. So just away with some family for a few weeks. Got a week working from here, and then going to take a week of R&R. So without further ado, let's jump on to Bitcoin. And guys and girls, do let me know if there's any issues with the sound, or if there's any lag or anything like that. Because I'm away at the moment, obviously I'm using a more condensed setup. I haven't dragged all the multiple screens and that away. I'm doing it off the laptop. So there is, it means I'm just going to have to cycle between the comments page and then the actual chart as well. So I will come back and get back to your comments and that, but I'll do it kind of in little stages. So let's start by covering Bitcoin. I want to do two things. I want to tell you what my current outlook is, and how I've got to that outlook. And then I want to review what we talked about on Monday, which we got that push higher. We didn't quite get the deeper kind of pullback before it took off, but we will see when we look into the charts that we filled the inefficiency, the fair value gap, and then we got that little pullback and that nice drive higher. And we didn't quite get the trigger yesterday on the trade, which would have been a lovely 8-9x. But, you know, the idea and the principle was sound, but we also need to review where we've gone wrong or where I've gone wrong. Okay, so in terms of that, we're going to look at that trade and say, okay, why didn't we trigger? Was the entry point in the wrong place? Did the market just get front run? We want to look at those things. It's so important to review all of our trades, journal them, and also as well to not forget that you learn so much from your losing trades. I know it can be frustrating, guys, when you lose a trade, but actually when you get your head back into your journal, you study those over time, you can notice patterns emerging that's so important to improvement. So Punit, hello, my friend, all the way from India. Fantastic. I am reading for a second time my favorite book at the moment, which is, or favorite kind of non-trading or education book, which is Shantaram, which is set in India. I think Apple have just made a series about it as well, but not particularly interested in that. They normally destroy books anyway, movies. But fantastic to have you on all the way from India. Dean as well. Hey, everyone. Right, I'll get back to the comments in a moment, guys. I'm going to dive into the chart and let's see where we are. Okay, so what you can see here, I've got the 4-hour chart up. Let me just dive this onto a daily very quickly, which is where we really get our kind of higher time frame view from. Traditional markets, and I do this with crypto as well, but we will start with the weekly chart because it's really important that we don't lose sight of the higher time frame bias. Okay, so for this, I mean, it's really simple. This one we can see as we've been coming down, we have just been dropping and dropping and dropping. All right, and what's been happening is we've been breaking down, coming back to test these and fill these inefficiencies before dropping again. See another one here, which is where this pulled up into, and we've had another situation right here. Okay, so when we're looking at this, something we're looking at in terms of gauging any strength in the market is when we see these highs, right? And this is why this was a sneaky move that got a lot of people caught, right? Because everybody wanted to get bullish again. People saw these lows being swept, market structure break to the upside. Finally, people were really desperate to jump on board. Unfortunately, obviously, you know, if you're bullish on crypto, this ended up being a deviation, and then we really had a quite severe breakdown. Now, a lot of how I trade is very much based around this. I learned a lot of my craft from people like ICT, from Trader SZ. So it's looking at kind of market manipulations, if you like, or liquidity runs, whether you believe it's, you know, algorithmic trading, whether you believe that it's institutional buying, big players. If you just think about it as large sums of money or big players that have the ability to place position sizes that are so large they can affect markets, the reason that we get moves like this is to generate liquidity. If you're a big player up here and you've got a lot of orders you need to get filled, right, then, you know, you want to convince the market to go the other way, because when the market's opening all these buy orders here. And let's remember, we got breakout traders who are buying on the break of this level. So loads of buy orders here. Yeah. But what you've also got is people that were short here. You've got stop losses above here, which are also buy orders. So if you're a big player wanting to sell, pushing the market that way to make it look favorable for the bulls ends up creating a lot of buy orders, and that fills your sells, and then the market kind of sells off. All right. So that's the kind of principle of what we're looking at. So when we're in a strong downtrend like this, we want to look at the key highs, and we're saying to ourselves, okay, key highs, key lows. Yeah. What we notice is the high here doesn't get taken afterwards, but the low gets broken, right? And then you've got situations like this. Again, the high not troubled, the prior low broken. Forgive the rubbish line, but you get the point. So what we'd want to see on a weekly scale to get bullish again is obviously market structure getting above here, right? And then starting to move to the upside. Now, obviously, that's potentially quite a long way off, as we can see on a weekly scale, but it's really, really important that we give ourselves this context, right? The other thing that I'm looking for is I'm saying, okay, this is my highest of higher time frame views. What's drawing the market higher? We can see this inefficiency here, right? Or this fair value gap. And let me just draw this in for you quickly. Right, so we can see this. Now, the market's being drawn up into this, right? And then we can see it previously as well, just to give you guys another couple of examples. Okay, we can see how it was drawn into that inefficiency here. And again here, right? So we see we have these big drops, these big impulsive drops, lack of order, so the market just really drops like a stone. The market comes into these areas to rebalance. So what we can use as a strategy as we decant this down onto lower time frames is saying, okay, we want to find out when the market gets into these areas, these key points of interest, POIs, if you like, then that's when we want to be saying to ourselves, okay, well, what do we want to see in terms of reversal signs? So let me just clean this up. And we're going to drop down to our daily chart. The other thing that we can see here as well, and this is something that SZ says that I think such a clever thing sounds really condescending, does it? But he's such a smart guy. But I mean, I think it's right on point, which is this: small body candles. Remember, the volume of the trading is in the body, right? So if we ignored the wicks, small body candles lead to big body candles. Yeah, it's a really, really good thing. And in that way, when you're looking at the market, you're looking at the kind of compression factor, and you're saying, okay, small body candles, big move. Yeah. So let's look at this on a daily scale, and we can also see on the weekly there as well how much price has been compressing. So is that clear for everyone so far? Forgive the squidgy little chart. I'm going to go back to that in a second. Just going to take a very quick look at the questions. QP's Variety Channel, good morning to you too. Steve Etienne, hey buddy, good to have you back on the stream. Dean again, could we have a look at Euro USD if you got time? Absolutely, mate. Remind me of that towards the end. Dan P, good afternoon, mate. I think I'm about 6 cups of tea in at the moment. Awesome. So let's just take a quick look at this. Now, we're just overlaying exactly the same principles, right? We're taking from our higher time frame from our bias that we're loading onto our lower time frames, or as we decant, moving down through the time frames. Okay, I'm not looking for anything different. Right, and what I mean by that is the principles remain the same in terms of how the market moves, right? So we're looking for highs and lows to be taken, key areas of liquidity, and then we want to monitor the market and able to give ourselves a high probability setup. There is nothing in trading that will be exact. There's nothing that will win all the time. In fact, some of the most successful systems in terms of returning profitability can have win rates below 50%, right? So it's very, very important that you understand the strategy that you're trading. Typically, the lower the time frame or the mean reversion type strategies will have a higher win rate. But the flip side of that is you'll have much smaller moves, right, in terms of percentage. So you end up paying a lot more in fees. So all about managing that. And in fact, I want to do some video content on that in the next few weeks to really help people understand that, because I think a lot of people get caught out when it comes to low time frame day trading. So what have we got on the chart here? Well, what we can see is we've got this daily fair value gap. Now that is what's had us in bullish mode. Okay, we can see this grey area, right? So now when we came down into here, what have we done? We're looking at market structure. We come down here, we take out the liquidity below these lows, right? So then we can see here as we set the low, the higher low, and then the break of that high, we've had a few days of nice bullish trading. Okay. Now, you can get in more aggressively on these moves as well. You can see sweeps like that. Obviously, you would dive into the lower time frame, and then you're going to be looking for sweeps that happen afterwards, right? So things like this low getting taken out. We see these reversal type candles, doji type candles, when it's a little bit more to the top like that, almost a bit like a hammer candle, right? Or a pin bar. Not quite there, but it gives you the idea. These long downside wicks show us absorption, right? We can see how the market, if we just take this level, for example, right? And we come down to the wicks here, we can see if we zoom in, and this isn't a fair value gap, guys, so let me just change the color of this so it doesn't get confusing. But what's interesting here is look at how all the bodies of these candles stop pretty much in the same place, right? Then you've got the wicks down here drawing on liquidity, and then it fuels that move to the upside. So let's now break this down a little bit further, because we want to get through Bitcoin a bit quicker today. We covered it in quite a bit of detail on Monday. Bias was accurate in terms of what we were looking for. We got our fair value gap fulfill. We came back to that. We said if we then see bullish price action the following day, which was yesterday with the price opening, trading down a little bit, then we expect the prior day's high to be attacked, which is this, right? And the other thing that we're looking for as well is then liquidity above this high here, all right? So at the moment, I don't see why we wouldn't necessarily take this liquidity here unless the run of the prior day's high, which we'll mark in here, is enough to get this front run coming down. But what we want to be thinking about is if you're a big player, and you want to offload your position here, if market starts to come back down, right, and everyone's looking at this area and they're thinking, right, we're probably due a correction, then by the time you start to sell off the huge amount of contracts that you've got, your slippage can end up getting you, exiting down here, which is not where smart money, as ICT would call it, or institutional money wants to exit, right? Much better to drive price higher before doing something like this. I love how awful these lines are on on the higher time frames, but you get the point, right? Break out above this liquidity level, have a push up, generate some orders from what was in this prior consolidation on the lower time frame, getting everyone bullish, right? So that all of those orders can be flipped and then sold off. And that way it eliminates slippage for the bigger players. All right. So hope that is making sense. Steve, brilliant. Steve Etienne, fantastic. I suppose get away with it a little bit, living so close to France, a little bit of French connection with some friends and stuff like that as well. So I'm really happy about that, because normally my pronunciation is terrible, as some people on the stream will tell you. So if that's clear, what have we got and what's interesting us at the moment? So we filled this now. I'm going to leave this on the chart so that we can be aware of it when we look at it on the lower time frames, because I'm going to show you the trade idea that I had from yesterday, so that you guys can get on board with it. It's one that I shared on Twitter. Obviously, these trades get shared at the Bird Nest as well. And if that is something you're interested in, guys, it's a fantastic trading community that I'm a part of. We've got a number of professional traders covering everything from algorithmic system building to volume-based traders, lower time frame and range traders like myself, as well as a fantastic fundamental team and your real amazing swing traders as well. There'll be some information in the description, guys. You can grab yourself a free trial. And yeah, if that's of interest to you, fantastic. If you want to know more about it, feel free to hit me up on Twitter, BC_Richfield, and I'll tell you more about it. But for now, let's focus on the price action, okay? So here we are. The key point of interest for me is this fair value gap here. So as price made this impulsive move higher, we can see as it did so, it left the gap between this wick and this wick. Yeah. So this is what we're looking for when we're talking about a fair value gap, right? Or an inefficiency. We're looking for the gap between the first and the third candle. So 1, 2, 3. Yeah. And if you look anywhere else on the chart and you say, okay, what about these 3 candles? There's no gap here. These 3 candles, no, because we want to see the wicks and the bodies overlapping, right? If the bodies don't overlap or cross, so you have something there, then you can get a volume imbalance, which you see a little bit more in traditional markets. But that's how we're taking our gaps. Now, I'm happy to teach the basics of this, and that is really the basics of it. But I do really recommend that if this is of interest to you, you study the origin, the founder of this type of information, or certainly one of them, which is ICT. Okay. I'm not an ICT purist, which I know annoys a lot of the ICT purists. I absolutely love the guy. Lots of time for him. Learned a lot of my craft and trade off of him. But I also a real student of the market. I've built a number of systems over the years and known a lot of other people who have built very profitable systems that don't rely on those concepts. So for me, I like to have a broader horizon. But I think his stuff is absolutely fantastic. And if it's of interest to you, then do check it out. Okay, no affiliation, obviously. Just do what's best for you. So let's drop this down to a 4 hour now and say to ourselves, okay, what are we looking for? So we can see the reaction we've had here on a 4 hour scale. That's our daily high, remember? So that's the prior day's high. And you check this or make it easier for yourself by going down to this little sun emblem here in kind of the bottom right corner of the chart. Click on that and you can put your session breaks on, all right? And all it does is, hope you guys can see this clearly, just these thin grey lines. And you can change the colour of these. You can make them really prominent or really thick. I like them to be non-obtrusive, so I keep them quite thin, but hopefully you guys can see those. But all that does is that shows you, in terms of UTC, when the midnight is, all right? And then, which we'll go into, you see these blue dots here, and this lovely little logo up the top here is another indicator, again, no affiliation, by a really nice chap called Dr. Fuse, who does some really cool kind of stuff for price action and that means it just really doesn't clutter up your chart too much. And just one more thing on this, in terms of indicators, I do try different ones. I get asked to trial different ones and bits and pieces. I'm not a big user of indicators, but of the very few that I do use, I like his stuff because it helps me with the different session timings and bits and pieces and nice clean charts. But the other thing that I do use is the B Pro. Okay, so this is our in-house indicator, the Burbicator Pro. It's got a whole host and ton of amazing features that even means that at points you could build it into an automated system, which we've got people doing. So we're going to bring you more on that very soon. But what I use it for mainly are the divergences. Okay, now for me, these are really, really powerful. This is a really, really powerful tool. Okay, so this indicator actually takes it from, I believe, 10 or 11 different oscillators and then gives you a percentage weighting on the divergence. Now, one thing that you'll notice with divergences, obviously on their own, they can be really helpful. I mean, you got a good trade there, you got a good trade there, good trade there, decent day trade there, probably here. They're decent. This one wouldn't have worked out great. That one was very good. That one didn't obviously work out. This one, okay-ish. I use it on the 4 hour, mainly on the daily. But what we want to do is use it with confluence, right? So let me just turn the session breaks off quickly and show you about this, because I know a lot of people ask about the divergences as well. So let me just check the questions very quickly in case we've got anything pertaining to this. Do we still do the live stream before the CPI release, Carlo? Yeah, so I know some of the team do. We obviously keep everyone aware of that at the Nest. So we obviously have our chat rooms and bits and pieces that always has the trading team, or at least sort of half of the trading team in it live at all times for you to interact with. So we cover the CPI data. Now, we will cover it in terms of news events, but as a team, and well, I don't want to speak for the team, actually. They can speak for themselves. For me, I don't trade those days, right? You get super volatility, you get these real massive whipsaws and bits and pieces, all right? So for me, I like to just kind of sit on the sidelines. Yes, you can get some big moves and stuff like that, but what I normally like to do is, and what you often see is, you'll see liquidity get taken one side, liquidity ripped on the other side, and then the move that, the market move that it wants to make will take place. Let's just make that full screen as well. So, Steve Etienne, in your opinion, do you think BTC will fill the fair value gap on the weekly and come down to 11K, 14K? I've heard you say previously that the gaps don't always fill until much later. Fantastic question, Steve. Let me pop that on the screen. And actually, before, I suppose I don't need to go into the chart to explain this, right? So, yeah, obviously, one of the really interesting things about your inefficiencies is they can fill at any point. And in fact, I will actually go onto the chart for this. Let me go onto a weekly chart. We'll come back to the B Pro in a moment. So, a really good example of some of these, right, are, and I'll just use a horizontal ray for this one, guys, so we can see these. So here's the top of our fair value gap. There's the bottom. All right. And then we'll draw this one in as well. And again, I imagine, like myself and like a lot of other traders who are talking about this, and let's just make these a different color, actually. And other traders that are talking about these as well. This is where a lot of people are deriving these kind of figures from, right? So when we look at this here, this is the consolidation that preceded the really, really huge run up for the bull run. All right, this was back in 2020, around about October, I think, was it? Or October when we took off. This was August to September. That was a beautiful run up. But in these impulsive moves, you leave these inefficiencies, right? Now, we've got those marked up. What we can see here as well is in this run up here, we left this inefficiency, right? Or fair value gap. Now, we've gone all the way up here. We've left this here. We've dipped into it here, right? Round about to the 50% mark, right? So we'd be looking here to establish long positions as well to continue up unless we got a breakdown through it. Then you can see here that it finally kind of got filled over here. So that was May 2021 and the gap was created in February. All right. Now, this one down here, right, was created in November, right, 2020 and hasn't been filled yet. The one below that, obviously, from before. So you're absolutely right in what you're saying, mate. There is no kind of guarantee with those when they're going to fill, right? So we need to be aware of them. But what we want to do, like with all of our trades, we want to look at the higher time frame and then we want to base our entries and our strategy in terms of trigger mechanisms around a lower time frame so that they fit. And you can see a number of these examples with these fair value gaps here, for example, created in January 2022 and then filled in March. And like I said, this was that little cheeky move that kind of popped out the top, big deviation before this huge sell-off. Now, you often, when you see these deviations of swing fails, right, swing failure patterns, like here is a prime example. Obviously, let's pop this one in as well because that's one that we were talking about too. Now, what happens is when you see these really aggressive sell-offs, and sometimes when you see the pumps as well in bullish conditions, then what's happened is that's because people are trapped up here. And again, institutions, big money players, smart money have generated that, have manipulated that, or the market's pushed up there to create all of those buy orders so that they can fill a huge amount of sell orders. Remembering that these guys and girls and institutions have been long from sort of down here, they want a really clear place to offload their positions and a place where they can convince a lot of people, especially retail, that the market's going to continue to go up, right? So you can see that big sell-off. See this one here again. Everyone wanted to get bullish here. People so desperate to regain the bull market. And then you see the big aggressive sell-off there as well. It gives people little chance to get in. So I hope that answers your question, mate. Is that, and if not, please do ping it back to me and I'll be happy to go over it again. Green Star, good morning or good afternoon, buddy. Quick one here from Punit. In your opinion, what are the signs of trend exhaustion? What to look for? Okay, it's a really, really good question. Let me deal with that in a second. Good afternoon, Nitpar. Great to see you. And one more thing from Steve Etienne here. My thoughts on it are it's quite a low price for BTC to have to fill and balance. So maybe it fills in this cycle, the next cycle, it may be out of its range. What are your thoughts on this? Yeah, it's a good point. So I think understanding macroeconomic factors plays into this a lot. Macroeconomic and geopolitical, right? Now, I know everybody on CT, crypto, Twitter, etc., stuff like that, are now, talking about macroeconomics as if they're experts. I'd recommend following a guy called Macro Alf on Twitter. We had him on Congress, an exceptionally knowledgeable guy, does a free newsletter that's really, really helpful. Because we need to understand market conditions, we need to understand inflation, and we need to understand interest rates, right? So when inflation's higher, interest rates arise to curb inflation, right, to bring inflation down. Rising interest rates aren't good for risk assets, and neither is inflation, obviously, right? So I think when people are saying about hitting 12K, etc., I don't kind of try and predict exact numbers. What I'm looking for, and I'm looking at a chart, is an area of confluence where I think it makes sense for price to run. And they're typically untapped highs and lows, order blocks. And then the fair value gaps are the vessels, if you like, that are drawing price. All right. So I hope that makes sense. But yeah, if I had to kind of commit to an answer, I would say I think we probably do kind of come back up a bit, flush down a little bit lower, really kind of, in line with the macroeconomic outlook. Dollar's very, very strong. As the dollar continues to weaken a little bit, though, that will kind of put a little bit more money back into risk. But a lot of it's based around the Fed, right? And the noise coming out of the Fed is that they're going to continue to hike rates, right? So I just think that while that's going on, I don't know if anybody here keeps in tune with things like Bloomberg and that, but it's a really, really good resource. And, they're always kind of a little bit surprised, really. The Fed's statement is really, really clear, but the markets seem to be pricing in some rate easings. But I don't know. I just don't know if that really makes sense to me when you look at the overall figures. Now, I'm not a macroeconomic expert by any means. I either take my information from other people, I do my own research on it deeply, and I trust in people that I've got in my own team at the Bird Nest and also some other experts. But what I would say is make sure that's something that you've got an idea on along with the economic calendar, right? So like this week when we've got CPI data coming out, that has the potential to inject a lot of volatility into the market, as we know. But keep an eye on that, right? And basically, while we're in the current surroundings, we're going to get these kind of what we would call bear market rallies, right? Where you get the risk reliefs like we're getting in these pumps at the moment. But when we look at the market structure overall, you see these pumps are very often met with very, very aggressive dumps. Now, in terms of exhaustion, which was a really good question asked as well, on a higher time frame or on any time frame really, because it's price is fractal, so it very much depends on what time frame you're looking to execute, which is really important actually. So for me, I use typically the daily time frame to get my overall feel on where the market is going, and then I'm decanting that down to a 4-hour, hourly, 15-minute, 5-minute down to a 1 minute in terms of trade executions, right? But for example, it's no good me getting my bias on a daily and then trying to execute on a 1 minute. They're just too far apart, right? What you want to find is if, for example, you're in a bearish overall trend, say on the weekly and the daily, just to take a higher time frame example, because I know a lot of you guys and girls trade the higher time frames because you're balancing it around other jobs, like I used to do years ago as well. Then, if you've got a bearish scenario on the weekly, bearish scenario on the daily, what you don't want to do is jump into a trade when you've got a bearishness on the 4-hour, right? What you want to do is wait for the 4-hour to be bullish. Yeah, it sounds really counterintuitive, but you want to be involved in that pullback and then look for your opportunities to short. So, for example, let's just look at this section here. Yeah, do let me know, guys, if you can see this. No, that seems to be fine. So let's take this section here, right? We come over here. We've got the key swing low. We get our change of character here. We get our break of structure here, right? And then price starts to trade down. Now, on a weekly scale, we're bearish probably about here. Yeah, so we're bearish, bearish, bearish. Now, if we're buying these bearish days, or we're buying after these bearish days, look what a terrible trade it would be, right? Big bearish day, right? I'll jump into a trade here. Comes here. Let me zoom in so you can see this guy's a bit clearer. Big bearish day. Yeah, you jump into the charts here. Okay, you get a little move down, but you're targeting a lot lower. What happens? You probably got your stops above this high or this high. The daily highs, remember, these are big candles. You get taken out, used for liquidity, then the price goes to where you think. And it happens to people a lot. I've got a lot of my mentoring students who will say to me, God, you know what, I thought, or I really did believe the market was going there, but I entered the position, I got stopped out, and just after I got stopped out, it flew off to target. That's the whole way that the market breathes and interacts, and this whole manipulation, right? So if we look at this here, what we really want to be looking at, right, as we have these big pullbacks, is we want to be looking for these bullish days, to be drawing up. And what do we believe it's drawing up into, right? Which is another important question. This is why fair value gaps, I find these such an important tool, right? And let's draw it right across to the fill here. Right, so there's our fair value gap here on a daily scale. Now, we've had this big bearish day, bearish day, bearish day, right? Now, when we get this nice bullish corrective move, we're saying to ourselves, okay, nice bullish daily close, let's take a look at the high that's left, the prior day's high, which is left here, and say to ourselves, right, and this is something I learned off ICT and his original mentorship, and it's a very, very clever way to think about this. If we want to look at a bearish day, as in we want to see bearish continuation, what we want to see is the day open. So this is the daily open. We would then want to see price trade up, which it does here, giving us opportunities to get in, ideally taking out a prior day's high. This is obviously for a bearish scenario, or drawing up into some kind of point of interest, which we'll look at on the lower time frames, before then selling off. And where do you target? You target the prior lows, right? So we can see here, bearish day, opens, trades up, slams down. Bearish day, opens, trades up, slams down. Bullish day, opens, trades up, and then pulls back, right? Now, on this bullish day, this is another thing that can induce buyers, right? We've got a nice bullish engulfing candle here. And my good friend and fellow Birdnest trader, Bast, is someone who's excellent at this. He always waits for a second confirmation candle after a bullish engulfing, right? Because just to get that extra bit. Now, what we see here, we've got the prior day's high. What did we say about bearish continuation? We want to see the day open. We want to see it trade up, take liquidity or into a point of interest, which is here, and then trade down, right? Now, if your stops are above the high of the day here, even when these days then open, you're still within the trend, okay? So, I know I'm going off topic just a little fraction here, guys, but I just want to cover that for you because I think it's really, really important for people to understand that relationship between the higher time frames and the lower time frames. A lot of people want to see bearish weekly, bearish daily, bearish 4 hour, and then look to execute a bearish trade. You're actually a lot better off waiting for those pullbacks. And I know we're doing this on the daily, right? But it's also to kind of give you guys a bit of insight on how you can read these kind of daily candles. Another thing as well, which is another teaching of ICTs that I use very often, is if we're looking at these swing highs and swing lows. And for those that don't know, I'm very much on ICT's page with this in what constitutes a swing high and low. I want to see a key high flanked by 2 lower highs. Yeah. And for a swing low, I want to see a low flanked by 2 higher lows. All right. So it makes like a V like that, right? That for me is a keen and clean swing high or swing low, all right? But when we get these, yeah, ICT teaches this. Now, when you see a swing high or a swing low broken, yeah, so say, for example, you want to get into a bullish trend, what you want to see is, and let's use an example. Actually, we can use any example here. Now, we've had a run on this liquidity up here, right? So price starts to break down. So we're in a bearish, we've got bearish momentum. See, we set this swing low here because it's flanked by 2 higher lows, yeah? So we've taken out liquidity. We've then set a lower low. We're then looking for our swing high, which is this one here because it's flanked by 2 lower highs. And on 1, 2, 3 candles, yeah, when we trade below that candle's low here, the following day, we then trade it down to this candle's low again. It is remarkably accurate, guys. Now, don't take my word for it. I'm not going to say anything more than that because I'm not the expert. ICT is, right? Like I say, I use a hybrid of different concepts, which is what I bring to you guys in the stream and what I teach over at the Nest. But for his specific stuff, please do go over to his and you'll find that in his scalping series, high probability scalper series. All right. So before I digress even more, apologies, let's just take a quick look. And we're saying that's how we're looking at trend, right? And that's in terms of playing into exhaustion, I'm typically looking at the candle wicks, yeah, and how close the highs are getting together. So this is a really nice example, actually. We've got this bullish trend, high, low, break of market structure here. So we're now into a bullish market structure, higher highs, higher lows, yeah. Now notice the gap between here and here, yeah. We see price retraces, fails to take out the prior swing low, which is a sign of strength. It's coming into the order blocks that reside in here or the consolidation. Price then breaks out, comes to the upside. Notice you get a couple of downside wicks. Correction, again, into an order block. This order block's being respected here. Price pumps again. Now, when we get to here, notice how these highs are closer together than these highs, right? So we're saying to ourselves, okay, actually, things look like they're starting to lose a bit of momentum, right? Then we have that correction. We come up here. Now, look at the distance and difference between the highs, right? So let's just take our measurement tool out. Obviously, you don't need the price range on this, the date. But we're just measuring from this candle's high to this candle's high, 7.43%, right? Now, if we move this across and we say to ourselves, okay, well, what about this candle's high to this candle's high? Well, now we've dropped to 1.76%, okay? You can see that there's a definite slowing up, right? The highs aren't getting quite as high before they're rejecting. Also, look at the candles, right? Look at the bottom, look at the wicks. We've got 1 key tall wick here, and then we get the sell-off. 2 here, 1, 2, 3 here, maybe a 4th, right? All the time while there's less distance going from the highs, right? So then we mark this high here to this high here. 1.9%, call it 2%, right? They're just not really expanding beyond that. And then again, when we look at the wicks, what have we got? all these long upside wicks. What's that showing? Absorption, showing that kind of pressure is now moving to the downside. And then your confirmation is when we take out these lows down here, right? And obviously on a higher time frame, like we're talking about before, if we look at this for our fair value gap, what happens? Price sells off, comes back in here. Again, remember, we don't want to be selling the bearish candles. We want to be selling the bullish candles, right? Bullish candles come up to here. We see our sweep, and then we get our sell off as well. Okay. Let me just pop back to the comments for a minute, guys. Make sure that is clear enough. Quick question here from Carlo. What are more important, CPI data or GDP report? Very hard to say because it depends in terms of the context of it. But basically, both have the ability, obviously, to create volatility in the markets. It just very much depends which side of it is, whether it's favourable for risk assets or non-favourable for risk assets. Imran Khan, absolutely bless you, my friend, and Steve Etienne as well, and everybody else for your lovely comments in the chat. Very much appreciate it. Like I say, love spending my time on here with you guys. Hope you guys learned something, and I'm not convincing you to go out there and become traders or do that, but hopefully it gives you a little insight into how I trade as well. Menno, hello, buddy. Fantastic to have you on the stream. So let's take a look at this question. If fair value gaps are such strong price mags, it is interesting to know statistically how often price draws into fair value gaps in BTC history. Has anybody calculated the percentage of fair value gaps that did not yet get filled? That is a very, very interesting study. It's not something I've done personally, actually, but I think that would actually be a really, really interesting study. So I'll have to have a look into that, and we'll obviously have a bit of a deeper dive into that. But yeah, absolutely, because understanding the relationship between the fair value gaps as well. So looking at it as a magnet in terms of its drawing price close, we never know if it's going to completely fill it at that moment, right? As we see with our examples here, right? We get that initial draw in, then we get the sell-off, we get another draw in, we still don't quite get the fill, yeah? But what we're saying is when we're using this as a magnet, what we're then looking for are our trigger mechanisms, yeah? So when we're getting drawn into here, we want to see clear highs taken out to return to bearish territory. So we set this clean high here, and what we notice is we draw a line, which I'll do so here. Across here, we can see the sweeps. Price comes up, that's the highest high there, takes the liquidity. This gives you your higher probability setups to the downside. And we can also see here as well, when we close this bullish candle, that's where we get our sweep. And remember, that's because what we're looking for is, for the bullish days, we want to see price open, trade down, and then trade up. Close, open, trade down, trade up. Always targeting the prior day's high as our first port of call, right? Price trades down, trades up. Now, when we set this higher, what's interesting here is you'll notice that as we come up, we open this day, take out this higher, and then we start trading back below it, right? Now, obviously on a daily scale, this was a really huge move to the downside, right? But what you would be doing is you'd be waiting for confirmation and then looking to enter on the lower time frames, okay? So, fantastic. Menno, you're very welcome, mate. Steve Etienne as well in there. It is a brilliant question. Yeah, love that question. And then quick question here from Eric Murillo. Wait, hasn't he been outed as being fraudulent by Vinny Emini? I mean, people have been calling him fraudulent for years. Along with a lot of other traders, really. It's a very, very thankless industry, in truth. It's a very difficult industry. But the problem is, what you're doing is you're playing a game of probabilities, right? And like I say, people can win and have incredible on 35% win rates, right? So if you're someone that's putting yourself in the public eye and then you're open to that criticism, you're trading that system daily, right? So over time, you know it works for you. You've tested it, you get your returns, you know it's profitable. But people dipping in and out, copy trading you or working in those kind of respects, is very, very difficult to get that same consistency. And also, if you're losing 7 of every 10 trades, right, very easy for people to call you a fraud. For me, I've traded those systems. I've built profitable systems around that. I've traded his exact systems and traded them very profitably as well. And I actually think this year will probably put a lot of those doubters to bed, in truth. You know, I think he's got a really, really big thing going on this year. It's unfortunate. Well, not unfortunate. I will watch it, but I'll watch it past its time being done. I don't have the time really at the moment to commit to his new course and bits and pieces, although I will review it because I find him a fascinating person with a lot of great insight and a very interesting character as well. But I certainly don't think he's fraudulent. I've seen him live trade. I've been part of groups. So, done his original mentorship, 2022 mentorship, scalping series, market maker series, bits and pieces. And a lot of the concepts aren't just these really whacked out crazy ideas. A lot of them are based around market structure, right? But I think what a lot of people don't get their head around is he's talking about an interbank algorithm that controls this, right? I think that's what people kind of have disagreements with. So let's jump back to the charts and let's do some requests. Yeah. So this is where we are with Bitcoin. Basically, we've left ourselves 20 minutes towards the end here to get some requests in. I know we got a Euro USD, I believe, but guys, if you're on here and you do want to see something, ping some up and we'll pick a couple of charts quickly, try and do a top down on 2 different assets. So ping them into the chat and let's take a look. So here we are. I think we're either going to drive up to push towards this liquidity up here, right? Should make sense. Take out this, what's resting above here. Although obviously, as we can see here, it's not a clear daily high, right? This obviously is the daily swing high, yeah, flanked by 2 lower highs. That's asking quite a lot from price to get up to sort of 18, almost 18.4, yeah? So it could happen. Of course, it could happen. Now, one other thing to say is when we're considering factors like this, we want to look at correlated and counter-correlated assets. We've got the DXY here, which we can see here from this line. This OBM is our monthly order block. See how prices come in, is currently respecting that quite nicely. If we've also taken out these equal lows here, right, which normally leads to a bit of a reversal. It could be short-lived. We could come up into here and then tank again. But I think if we start getting back above January's 2017's high, which we can see was really, really key along here, even on a daily scale, look, 1, 2, 3, 4, 5, 6, 7, 8, 9 attempts to really kind of get below it. We closed a couple of candles, but these ended up being kind of liquidity runs or deviations, if you like, before we got back above. We've now had a significant close down here, but at the moment the day is bullish, right, which can put pressure onto risk assets. The other thing that we want to take a quick look at as well is ES, which is our S&P 500 on the mini contracts. And what we can see here, just wait for that to load a second, is that this is currently bullish as well. All right, we can see that we've had this range breakout here. Let me just pop down to the 4 hour to give you a little bit more context. So we got our range low here, range high, price came down, deviation, target the midline. Price then ran on this high here, right? Filled the fair value gap, sold back off down to range lows, then kind of chopped around here, kept getting rejected by the midline. Again, look, just taking the liquidity of the lows, pushing up, breaking back down, not quite getting enough to clear out these lows. But what we can see here is that cluster of lows here was taken. We've had this big impulsive move higher, broke out of range high into our fair value gap. And now we pulled back, right, again into this fair value gap here. And now price is moving higher. So in terms of targets on this, we've got the prior day's high sitting here, and we've got this clean high here. Normally, if we're seeing bullish price action on ES and NASDAQ, for example, then that translates into being quite good news for crypto. So that's just something else that we want to have in mind here as well, guys. Now, let me just cover this for you very quickly. I want to show you this trade setup idea. So I want to start sharing a few more of these with you guys on these streams as well. Obviously, share a lot with the trading group, but I want to share a few more publicly as well. Where was it? This was our setup. So didn't get filled on this one because I didn't get the deeper correction that I thought was coming. And I'm going to tell you exactly why. So I like to trade the London going into the New York crossover session. So that's what that represents, the New York AM trading session, which starts at 8:30. And then we're running through here, lunch, and then the PM session here as well. All right. So now the reasoning for this, and let me just draw a vertical line on here for you guys so we can just get a clear view on when we're looking to take our trades. Now, as you can see with here, you can check back on Twitter as well for this trade when it was voiced. I feel like we might get a deeper correction here because we had relative equal lows here, and I thought we could come down to just take that out, maybe even the liquidity down there, which we didn't. All right, this was our premium discount range at the time, so when we're in the lower half of this, we're favoring long trades. And what we can see, if I zoom in for you a little bit, is this was the trade setup idea, aiming to come back, purge liquidity of the lows, retake market structure to the upside, and then look for a pullback here to a fair value gap, or what I call the breaker line or breakout line. But we didn't get that. So when we review these things, it's really, really important we understand why. And what we actually got is this little pullback here was enough. Yeah. Was enough for us to take the liquidity from below here. So there's our sweep. What then happened is we had this big impulsive move higher, right? Took out these equal highs, which I had written up at the time. And that's when we're then looking for the correction to come back down. And I thought we might correct, be a little bit cheeky because we have had, this bullishness. We had this nice bit of compression here. I thought we might just get that to try and induce a few more people to go short. But actually, I think it generated enough. It came into this little 5-minute fair value gap here, which you can see by the volume of the bodies was respected. And then we had this really nice pump. So, yeah, I mean, obviously we want to, what was it, 7.6, 8R trades, something like that. Of course we want to win our trades, right? But at the end of the day, it's really, really important that we understand why they didn't work out or why we didn't get filled. And then that way we can use that to kind of decant down and say to ourselves, okay, how can we improve for the next ones, right? So now when we see this kind of move next time, we say to ourselves, okay, if we have this real impulse move higher, then we can always feather into these moves. Yes, we reduce our risk to reward, but if we're making an allowance for an entry here and possibly an entry here, then we could look to take a less risk to reward trade. So maybe it drops to like a 2.5 or 3R trade, but we give ourselves that wider stop loss, allowing ourselves to get in, and we can scale into a position as we go down. All right. So I waffle on too much. 15 minutes now to do a couple of charts. Let's have a look at what we've got. So let's have a very quick look. Scroll back up here. What have we got? So Nitpar would like to see Gala. Carlo saying Gala as well. Steve NDX, why with a nice mother bar? You taught me this. Fantastic, mate. Yep, love trading the mother bar patterns. And then Carlo, beautiful chart. Thank you. Yeah, do like keeping it nice and clean. BC, any chance you look at H bar? Yeah, okay. So should we do Gala and H bar then, shall we? Awesome. That'd be a nice way to close this one down. So let's get a little top down on Gala. I'm pretty sure I have these on already, actually. Yeah, so Gala, here we go. See if I've got any scribbles on Gala. Perfect. So let's absolutely smash through this. Now, like I said, let's start very quickly on the weekly. Right. Now, this is really interesting here with Gala, right? Because we've taken out this high. So we're going to do that as a slightly thicker line because that could be really significant, right? We do, whenever we come into one of these levels, our expectation is to get some kind of reaction or pullback, right? And think about it like this, because I'm not sure everybody thinks of it like this, and I'm not trying to teach you how to suck eggs if you do think about it this way. But I remember after I'd been trading first couple of years and really kind of got and started to take it very seriously, this was a really, really good way to think of it. So a lot of people think we get into this level, you're coming into sellers, right? The thing that you're doing is you're also coming into a point where people that are long in all this leg up here are looking for a clean and clear area to take profit, right? And like I said about manipulations as well, you're also looking at an area where the market makers want you to think that there's still more upside here. So people run into these positions and then it fills the orders of people that want to offload. All right. So in terms of a weekly scale, it's not really telling us much. Like a lot of these altcoins, right? We're just in this big downtrend, but we've had this nice pump here. And again, I don't speak about it personally because I'm not an expert in it. But we have a fantastic fundamental team at the Nest who keep me updated with these. And, obviously we've seen some pump on some AI coins and some other bits and pieces recently. So there's always a lovely synergy when you learn from these guys who are experts in their fields with fundamentals and then plug that in macroeconomics. And then that really, really will assist you as a trader. So as we're going down to the daily, let's see where we are. So immediately the first thing that jumps out at me here is the daily inefficiency fair value gap that we've got here. Right, so let's draw that across. Make sure that's on there, actually. Yep. FVG daily. Right, so again, we're saying to ourselves, this is a magnet for price, right? So price has run some key highs here, started to break down. Now we're saying, look, we don't know at this point if it's could stop there and then start to moon again, right? What we're looking for is to build a story. That's how I like to see it. We're looking to tell a story of price. What's price doing, right? So, for example, even when we're all the way down here, we're looking at our market structure, right? We're looking for price as it goes down, clearing out lows, taking out highs, the fluidity of the market. We have this big drop down. Here's our inefficiency. Yeah, another smaller one here, another one here. When price starts to bottom out here, yeah, we get this kind of pin bar reversal candle. Then as it starts to break back up, we see it fills this inefficiency here, shows strength to get back above it, right? Then we don't actually have a swing high until here. We see this big impulse move above it. What does that do? Fills the fair value gap. So you see what I'm doing there, just an example of how we're trying to read price. And I like doing it in a way that I'm saying to myself, okay, we're telling a story here. We're telling a story of price. Now, another thing that I find significant here is this high. Why? Because at the moment, as it stands, and we'll do this slightly thinner, is price hasn't managed to close on a daily scale above this. Set this high, big long wick, tried to, got shunted back below, tried to again, back below again, tried to again, and now it's back below again. That to me is a sign of a little bit of weakness, but that's the key takeaway for me on the daily chart. I'm then going to drop this down to the 4 hour. And like I said before as well, the other thing that I want to pop onto here is my B Pro. Now, like I was saying before, these are often catching corrective moves, right? So let's look at the price actions we build up here. In a downtrend, what does this do? Picks the correction to the upside. We come up, fill this fair value gap. These candles here, when you sweep them, gives you a great opportunity to get back in, right? Now, this one, we actually broke above, yeah? So we actually had a little bit of a shift in market structure here on a 4 hour scale because we took out this high, right? And closed above it. This, when we're looking to trade the following candle, gave us a beautiful warning. Hang on a minute. There's divergence here. The oscillators don't agree with the price action, right? And then we started to sell off. Again, catches the correction, fills the fair value gap, we start to sell off, all right? So that's the kind of pattern that's emerging. And we can see as we go through here, same thing, very, very small correction here, comes back up. We don't get one warning here. We do get one warning here and comes back, fills the fair value gap again. So once again, it's our storytelling on price. So for me, I'm interested when we're here, and we can see we catch this nice bearish divergence here as we see price come back down. All right. And it really does have a heavy sell-off. A lot of people closing positions out here. So we've got that. We know the divergence that we've got. So we're happy. We can turn this off and keep the charts nice and clean now. And then I'm saying to myself, okay, well, what am I looking for? We've got this fair value gap here. Like we said, it's our magnet for price, right? So what do we have here? That was our fair value gap. This has now been filled. Fantastic, right? So we can get rid of that. Now, what else are we looking for? This here, right? We've got orders sat in this block, this order block. Right? Now we're going to do this in a different color. So the orders that are sat in here, we can see prices come in, fail to close below, what in terms of volume, I mean, so your body. And then this one here, at the moment, is looking to trade below it. What would give me a bit more confidence in terms of looking down towards here would be if we did something like this. Now, if we purge below this and we start finding resistance, yeah, then I think we start to come down and hunt out that fair value gap lower, all right? Now, again, I'm not saying that's exactly what we're going to do, see other things and other confirmations, right? But if we want to just draw this across here, we'd ideally want to see the 50% of this order block respected, right? And then if we come into here, we'd look for our breakdown patterns, and then we've got a nice clean target lower down, okay? So that's where we're then looking on a 4 hour scale. We're saying, okay, how does that then play in? Let's take a look. Previously here, we said we've got our bearish divergence, right, on our 4 hour. We're coming back down. We see these long upside wicks, right? That's showing us there's absorption. That's the market pushing us down, right? So let's just grab this on the body of that one. We'll draw that in red. Notice all these wicks coming in here, but not really a lot of the bodies, right? So the trading volume is kind of trapped in this area here. We have this punch down. And then I think what I would have liked to see in an ideal world, and we might still get it if we're looking for a bearish scenario, is to mark this out here. Again, this is going in grey because it's our fair value gap. Now, as we've done previously, we can see price drop into here, find support, only to return to here. If we see this respected, and then we see price start to break back down again, right? Something like this. Then we're saying, okay, this gap here makes nice room for some day trades, and we could even get some continuation if it's going to continue to drive into this, those buy orders, and the pressure coming from the buying side is only going to last so long, right? So now we're looking at that. We say to ourselves, let's take a look at our 15-minute chart. You can go via the hourly as well sometimes, but the fair value gaps are so clear on here that we don't need to, right? Or no, that's not a very shrewd thing to say. You can do, but just make sure that you're consistent with it. If I can see that on the 4 hour, then I'm happy to go straight from the 4 hour down to the 15-minute, and that's where you're kind of getting into the nitty gritty of it. All right. Now, as we said before, the principles remain the same, right? As soon as price starts to break down here, we get our bearish divergence, which closes here. Yeah. So that's Monday. We got the divergence. So we're looking to trade from Tuesday. Yeah. So here we go. Now, what do we want to see? We want to see highs taken out, yeah, inefficiencies filled. So we can see here straight away, we've got our fair value gap, and you'll notice that the principles that we're applying to the charts remain the same as we go across. And I'm not covering a lot of range-based stuff at the moment today, guys, because I did say we'd make this a lot more about going deeper into kind of your fair value gaps and the trade setups for the alts. But as any of you who watch the stream regularly will know, I also break these down into ranges, which I will show you. So our premise is that price is going to seek out to fill inefficiencies, right? We've taken out liquidity above these highs and these highs here. We're remembering that we're bearish, right, on the higher time frames. So we're going in. We've now come into this. We've taken out liquidity above these highs, drawn into a fair value gap. Price breaks down. Yeah, you're not just going to blindly enter here. Right, and again, you would typically do this on the lower time frames, but I want to do this to show you can make this work on even a 15-minute. Here's the key low. Why? Because it's flanked by two higher lows, right? So this is where we get our shift in market structure, right? Boom. Big impulse move down. How price moves is very, very important, right? You want to see that, what ICT would call displacement, or what I would call impulse, really, which is you just want to see a punchy move, aggressive, right? Punches through here. What does it do? Leaves our inefficiency for us. So what have we got here, right? Quite simply, we've got a break in market structure. Yeah. We've got displacement. We've got this impulse move punching lower. That's telling us that people are stepping in here to go, right? People are ready to go. Bigger money stepping in, bigger players, right? Leaves this inefficiency here that allows price to draw up into here, allows us to place our orders, yeah, our sell orders. Our stops go above the origin candle high of the fair value gap move, 1, 2, 3, so above here. Or if you want to be super conservative, you can put it above the swing higher. And then we're saying to ourselves, okay, well, where are clean targets? First of all, these lows, yeah, and then we'd be looking down to here. And I often, to be conservative, will look at the volume closes, right? So the bodies rather than the wicks, yeah. Something like this, which is then next to that. You assume that that's where price is going to come down, because on a higher time frame, there's your nice V swing, yeah. So you would look to trade it to the bottom of this one, but then here I'd be looking to scale some out when we get to the bodies. We can see we get that nice move into there, all right? So that's how we'd be looking to it in terms of execution. Now, if we're looking to do this within our session trading times, because obviously I want to show you that, I wouldn't personally have taken that trade because it's outside of my trading parameters, but it doesn't mean it's outside of yours. It just means that you need to really make sure you're studying at what points you want to be active in the market. Yeah. So for me, what am I looking for? Same thing. Here's our AM session, right? And we're going to overrun this session by about 5 minutes, guys, but please do bear with me. So here's our session. Let's just make that a bit darker. So this is when I'm really, really getting interested. I'm watching how price action is developing around here. Now, what I want to see, yeah, is I want to see exactly what we just discussed. I want to see some liquidity taken from the highs, yeah, or price trade into a key point of interest. So for me, I'm looking here and I'm saying, okay, this high here, we can see when that's taken. Price comes up, yeah, comes back down. We don't get a shift in market structure, do we? Right? So there's no entry there for us. So then we're saying, okay, well, these highs have been set, becomes our next logical target. Now we see these highs get taken. Yeah. We have a change of character here with this low. When that gets taken out, we get our actual break of structure down here. Yeah. And look at this candle. This is the displacement move, right? This is telling us that people are ready to step in. So my entry here, same thing on the fair value gap, stops above the origin here, sorry, or you could put it above this swing here if you wanted to be more conservative. And then again, we're targeting the clean swing lows. And what else have we got? An order block. Yeah, so that's what we're looking at, guys. All right, so I hope that's been clear. Let me just pop back to the questions quickly before we then take a look at H bar, I believe it was. Let's have a look. Beautiful chub BC. Take a look at H bar. Yeah, absolutely. I'll do that. Beautiful double bottom on Flux BC. Okay, Flux USDT. Thank you, Justin Waters. We'll definitely be taking a look at that. Something else, guys, as well, that I just want to say super, super quickly, on topic but slightly off, is I think a lot of people, again, an ICT, I don't want to sound like a real ICT purist, I'm always quoting his stuff, but he does come up with some really, really good, interesting things. And other people say this as well, but you will hear it from him. Focus on less assets. I think a lot of people try to focus on tons and tons of different pairs and handles. I just think if you're looking at something, maybe just if you're really crypto focused, have BCC, have ETH, and then maybe one or two others, and really become an expert in studying those charts and looking at how price action moves in that way. And the same if you're in traditional markets, right? So you're looking at FX pairs or you're looking at the ES and the NASDAQ. It can really help you kind of keep your eye in. Okay, cool. So H bar, let's smash out H bar super quick. I hope that's been helpful, guys. Definitely don't want to do that. Do I want to go on here? Now let's get ourselves onto H bar. I think must have it on here in this endless list. There we go. Get rid of any squiggles. Which actually, just interestingly, guys, when you're looking at these lines are just representing liquidity, right? Look what happens when we take out these key highs and lows. See how price just kind of moves between them? That's what they represent, which must have been just from another stream because I don't typically trade this asset. So, weekly. Let's see how much we've got this looking. There's any similarities here with Gala. And I mean, you can just see the devastating sell-off here. And again, look at these inefficiencies here, not even remotely getting filled yet. This one kind of pulled back into this a little bit, but the sell pressure was just so brutal. Any of these highs that have presented themselves have just been taken out and used to fuel liquidity to drive it lower. We've not got that kind of structural break here, although we can see that we're starting to pull back up. What I would be cautious of here is, as happened here, well, we didn't actually even get the pullback into that one here, right? But we've got this fair value gap here, right? This inefficiency. Draw this across to here, pretty much or very close to fully filling that, right? So that's something that's very, very much of interest here. Let's just check the high on this candle. High on this candle is 0.0440, 0.044430. Okay, so 4. Okay, so that is a swing high then, just barely. It means we've also taken out that high, right? So as we pop that on here and draw that across to there, we've got that, and then we come up, swing, take that out, right? And then we're looking to kind of come back down. Now, we're going to pop this onto a daily, and we're just going to be 2 more minutes, guys, just looking at this, and then we're going to close up for the day. As we see across here, these were the key lows that were taken out. We didn't get much of a reaction at the time, but if we draw this across, we can see as we got this move up higher, right? Again, even if you were waiting for this as your confirmation, you're just saying to yourself, look, filled that inefficiency, got this inefficiency here, right? Why do we think price will come up and be attracted to this higher time frame fair value gap? And we've got clean kind of relative equal highs here, right? You know, between here and here. So we can get in here and then look to trade this day up, all right? And that's what you can do with day trading. You don't need to catch these massive moves. You just want to be consistent. But we filled this gap now, right? Or pretty much. We haven't actually filled it to the T on the higher time frame, so do be aware of that. But we're now getting this corrective move. We've taken out liquidity above these equal highs, right? And they don't have to be perfect equal highs. Relative equal highs are fine. It just shows us that this stopped the market twice in this area. So we expect there to be sell pressure there as we go in. So we're now saying, okay, well, what's drawing price lower? Exactly the same principles, right? Price is being drawn lower here. And then we've also got this fair value gap below as well, yeah? So let's draw that in very quickly. And there we go there too. So now we're going to go onto our 4 hour. Yep, nothing else on there. Drop that onto our 4 hour. Let's flick our B Pro on and see what this is giving us here. Okay, we can see again, this was really lovely on this one, right? And I meant to say this cleaner earlier, but when you're talking about looking for confluence, right, these obviously make a lot more sense when you're looking for them related to sweeps as well. Yeah, swing fail, bullish divergence, fair value gap, bullish engulfing. A lot of things telling you price is looking to move higher there, right? Bearish, yeah, but we've not taken out any key swing highs, so we wait patiently. We sweep this high here, bearish engulfing, right? Bearish divergence, closes here. This candle here is then tradable to the downside. Or you wait for the inefficiency to develop like we got here, and then this pulls back nicely into it before continuation. And what do you target? Well, we're targeting these lows because price has come up, failed to take out this swing higher, retains its bearish structure on the higher time frames. So we're still looking for price to break down. All right. Now we've got the same thing here, right? We've got our bearish engulfing candle on the 4 hour. Price starts to break down. We didn't have an inefficiency in this move, yeah, because we had in terms of volume, but we had this, and then these wicks cross over here, completing that. Now what we want to look for is this very, very, very almost imperceptible fair value gap that we've got here. So what would I like to see here? Well, first of all, we haven't actually got a structural shift on the daily yet. We would need to take out this low. So there's two key areas of interest for me. One is here. Right, this area here. Where we'd be looking if we get some low time frame reactions and start to get into a bullish structure, I'd be looking to trade this back up, because I believe we could come up to this fair value gap here before further downside, or this could just be looking to springboard us higher. We don't really mind in terms of that. Our high time frame bias, we're willing to flip that because we just want to be on the side of the institutional buying, right? We want to be on the side because that way we're going to get caught in that wave, right? Get caught in the wave of smart money. And then, yeah, really clear, basically, this fair value gap, this here, I'd be looking for longs. I think if we purge below it and recover it, fantastic, long opportunities here. If we first come up to this fair value gap here, and start taking out some of the liquidity above these highs, then if we start to break down on a lower time frame, that's where I'm going to be looking for short trades, right? So once again, we can see here, if we'd played the bearish divergence that happened up here on Monday again, now we want to move ourselves through to Tuesday. Yeah. What do? We're waiting for price to come up, take out a significant high. Yeah. Come up, taking out that high. Breakdown in market structure. Now, this would have been outside of my trade zone, right? But might not be outside of yours. Principles always remain the same. Remember what we're looking for. Price to come up, take out a key high, trap people offside. Come back down, break market structure, leave us a nice inefficiency here on the breakdown. Again, look at that impulsive move. Yeah, this displacement. This is the inefficiency. We're looking for price to draw back into this. And that's where we're getting our short trades here on the low time frames to draw down into here, focused on first taking out these lows, which we can see we've just done here, and then we know the price is getting drawn down lower into these areas. So if I was looking for a relief rally long here, I'd be looking at this area, and I just want to see something like this, right? I'd want to see price kind of come down, wipe out the lows, this kind of pattern, right? Where we come down, take out a key low, also raid a key level back here, yeah? Then when we recover the high that sweeps the low, we can look to enter here on the breaker line or breakout line, or we look for an inefficiency or a fair value gap and look for a deeper retracement into that. All right, guys, look, I know I've kept you a little bit longer on there. Apologies if I haven't got around to any of your questions and bits and pieces like that. I hope it's been really interesting for you. Just let me take a very quick look at the questions. Justin Waters, you're so welcome, buddy. Thanks so much for the comments. Really do appreciate all you guys, all the nice comments, feedback, and also some of the stuff that's constructive. If there's things I can do better, I really want to learn. So please don't hesitate to let me know if I speak too fast, if the streams are too long. I do try and make them short, but I'm useless at that. And then Dean, I'm really sorry, mate. Come and grab me, ping me a message on Twitter or around the nest, and I'll do you a Euro USD chart just for you. All right, mate. Gaming and metaverse, yep. Green, so I'm learning every stream something new. Thank you, and the Bird Nest for the awesome content. You're very welcome, guys. And yeah, please do remember I'm part of a much bigger fam as well, which is my Bird Nest family, and can't speak highly enough of those guys. Just find yourself a good trading community, good people, learn from good people, narrow your focus to something that you want to do. Go deep, right, with that focus. Yeah. Really look to master something, focus, understand what type of trader you are, reach out to people, ask questions. And I'm here twice a week. All right, guys, and I'm really, really happy to help you out in any way I can. So please come along, ask some questions, and then we'll go in. Burned! Made it just in time for the end of the stream, my man. Good to have you on there, though. You can watch this one. It will be uploaded shortly, and you can watch it back. All right? Everyone, have a fantastic week. I'm not sure what I'm going to be doing next week. I'm actually on leave, but I might try and pop on and see you guys. If not, I'll be doing bits and pieces on Twitter as well. So do come and reach out. And then we're back going really hard the week after, and we're going to really focus on getting 2023 under our belts. All right, everyone, have a fantastic week. Thank you so much for joining in. All the best, BC.